Will I? Yep. They can't hear me yet.
Not yet.
This one?
Yep. Play a little bit of music. I like that song, so it works out. Go ahead and start your live, Stokes.
All right, then I just pin it.
Yeah. Say, hey, we getting started over here on YouTube, getting it set up, but appreciate everybody stopping in, and all that good stuff.
We live. We live.
Okay, go ahead, pin it.
Talk to me, Dave. You down here?
Mm-hmm. And then let me know if you see it live. And all that good stuff.
We live. Nice. We live.
And then go ahead, pin it.
Talk to me, Dave. Down here?
Mm-hmm.
Now we making it happen. That's what I'm talking about, T. John.
And then let me know if you can
That's
see
what
it
I'm talking about. Go time.
Ask them if they can hear you, so.
Can everybody hear me? YouTube, IG, nice.
live.
All right. All right. That's what I'm talking about.
You can't hear it.
Now we making it happen. That's what I'm talking about, T. Josh. That's what I'm talking about. Go time.
Ask them if they can hear you, so.
All right. Can everybody hear me? YouTube. We about ready to get started. So we just want to make sure it's working on all these platforms so everybody. All right. Can get the game for free as I give it.
And then go ahead and do it. I'll explain. There's
Actually,
oh, they can hear you.
All right. Good. We about ready to get started, so we just want to make sure it's working on all these platforms so everybody can get the game for free as I give it.
And then go ahead and do it.
Hey, we are live for real.
yeah, on your IG.
Oh yeah.
Yeah. I'm talking about over here. So you'll be able to
I'm just saying. We are live.
stream.
All right, man. Let's get to it.
Cool.
Just so y'all know the characters in today's little session. Got Ben back there holding it down. Look at him. It's like he works at ESPN or something. You already know DP. DP.
Hey, what's good?
Bring it back. Nice. We in here now. Perfect. So we set this up. I appreciate Dave letting me use the space, doing his thing, to give people an opportunity to kind of have the accessibility that they may not get on a daily basis. And I make myself pretty accessible, but the reality of it is people got a ton of questions, and now we have a chance to actually answer them live in person as we kind of move through everything. So I don't want this to feel like a webinar or a seminar, anything crazy. I'm gonna try and make it as easy as I can. I kind of want that TNT NBA vibe to make this a little bit easier for everybody. But Dave's over here, I'm here, Ben's back here. We just gonna have an open discussion, answer a couple of questions. We got a super brief agenda, nothing crazy. I'm gonna touch on a couple different subjects for people, and then we just gonna shoot our shot from there. So with that being said, let's hop into it, right?
Yo, hey, everybody on YouTube, I appreciate everybody stopping in. Welcome to the stream, man. As you know, I'm DPG06, but in real life, I'm David Pierce.
In real life, not the metaverse.
Not the metaverse.
In real life.
Metaverse is gonna be real life here soon, man.
I hear you, Dave.
I appreciate everybody dropping in, man. I know there's gonna be some people still coming in here. We're gonna just talk around about people buying homes, look into how that looks. Whatever questions you have, don't hesitate to post that in the chat. We do have a couple of different things here that we're going to touch base on. The reason why I feel like this was something we needed to do is because my man Stokes, he's been in the industry for quite some time. We'll get an introduction from him in a second. But growing up, we didn't get the financial literature, right? We didn't, like, at least I didn't, right? We didn't get that, like, that place to, like, how to, like, build your credit or how to buy a home and all that stuff, man. When I first bought my home, I was 32. I was 32 when I bought my home. And it shouldn't have took that long. Honestly, I should have probably been younger to do it, right? If I knew I was going to stay here in Colorado, then why not, like, look into that early on, right? Granted, I probably couldn't have at the time because of credit at the time. I had to build my credit and all that good stuff. So if you have questions around credit, don't hesitate to ask those type of questions. You're not the only one. Like you're not. It took me a while to get to where I was or where I am with credit, right? So if you have those type of questions, don't hesitate. But if you're looking to buy your first home, buy your next home, rental properties, anything of that sort, we're gonna touch base on it. But without further ado, I'm gonna have my man Stokes introduce himself. He's gonna give a little background on what he does, how long he's been in the industry, all that good stuff, and then we're gonna talk. Just kind of go from there, man. So Stokes, don't forget to look at both cameras.
Oh yeah, I got you. My bad. I'm trying to get things set up. So obviously, for most of you guys, if you know me, I am a mortgage officer. I work for a company. I'm not going to get too deep into the company yet because I don't want to make any biased assumptions out there by anybody. I've done really well in my career. I've been in lending for like 11 years now. I've been able to help a ton of people in a lot of different, price points and different scenarios and backgrounds. And it's been an amazing experience top to bottom. I'm lucky to do what I get to do every day. So full transparency, I closed over 150 deals last year. I've closed, homes from all different ranges, whether you're, buying a $4 million place in Vail to a $50,000 condo in Lamar. I mean, yeah, we do it all. So just making sure everybody kind of has an idea that I don't have a specific preference. I know sometimes people reach out to me and say, hey, do you only do this size loan, or do you only work with these kind of clients? And no, that's not the case. I work with them and everybody else. So there's no discrimination on my side. I just want to help people that want to get into homes. It doesn't matter if it's your first home or your fifth home. Let's make it happen. That's my philosophy on it. So as we kind of get into it, me and Dave will kind of talk through some different things. It is not going to be a scenario where you just have me just blasting through a bunch of stuff. I sincerely want people to jump in the chat, ask questions. If you're on the live, let's make it happen. I want to make it as casual as I can, but I want it to be an experience where everybody gets something out of it, because there is 100% chance you have a question and somebody else has the exact same question. So let's just get it answered, right? What I will do is I'm gonna touch on a couple of things really briefly. The environment, right? Everybody's like, well, is it a great time to buy a house? Is it not? Your realtor is going to give you some good insight on that. I can give you the insight on just doing it every day. If you're in Colorado, I also lend in all 50 states. So in some other places, I have some insight as well. The reality of it is, it's not going to be easy right now because we don't have a lot of houses for sale. I know people throw the word inventory around a lot. And all that means is we just don't have as many houses for sale as we do buyers, right? Right now, there's significantly more buyers out there than there are homes for sale. And, some of it is kind of the runoff from the pandemic situation. And I remember when the pandemic thing was popping, everybody was like, nope, it's not the time to buy a house. Don't do it. It's going to crash. The market's going to go down. And now what's crazy is 2 years later, everybody that bought during the pandemic is sitting on significant equity.
For me, for instance.
Significant equity. It doesn't matter when you bought. If you bought in the last 2 years, if you bought 2 weeks ago, your house is probably more for today than it was then. So when I say all that, I don't mean that to like scare somebody away or make them feel like they can't do one thing or the other. But the reality of it is we're in a very unique environment, right? Prices of houses have gone up quite a bit, and there's not a ton that people can do to try and offset that scenario until there's more houses available. So what's happening? People are building houses. People are trying to house hack their way through different things. We got duplexes and a lot of other scenarios now where people are like, well, I want a cash flow on the house so I don't, lose out on equity if something does happen. And there's no right or wrong way to do it. I think the reality of it is we're in a space now where if you want to buy. Is it going to be easy? Probably not. Are you going to have to compete? 99% sure. But there's nothing wrong with that. That's just part of the game and the way it's played. As we kind of talk through the environment a little bit, people are going through different scenarios where they're asking about like, how much can I qualify for? What I'm comfortable with in terms of a payment. And years ago, it wasn't as big of a deal. Like your max qualification might be $700,000. But you only want to spend $500,000, great. Most people didn't have to like stretch themselves that much. Now people are trying to qualify for the maximum amount so they can go in and put offers on properties that make sense for their lifestyle and the way that they're living and it gives them some opportunity to be competitive when they have to go over asking, right? So you might be qualified for 500,000, and you're looking at homes that are 450 because you know there's a high likelihood that you're gonna have to get into a situation where you bid that up or go over asking. And it used to be, it's not. I'm not gonna say it's not uncommon. Like it wasn't uncommon before. It just wasn't as prevalent. Like, oh, okay, maybe you go $5,000 over asking, maybe you go $10,000 over asking. Now people are going, you know, significantly more over asking, and depending on the house, location, you know, some of the aesthetics, that can make it hyper competitive. So best thing you can do is what I'm going to try and get into now is just like the home buying process, what to do, what to start with. Getting pre-qualified or pre-approved is probably your best step in almost every scenario, right? One, because you learn exactly what you're qualified for. Two, you get in front of any challenges, right? So you might have, I don't know, a car that you co-signed on with your mom. Perfect example, right? Well, dang, that car payment is $500 a month, and that's really messing up what you could qualify for in terms of a property, right? Well, if we can show that you haven't been paying on that car and your mom's the only one paying on it for the last 12 months, I can take that out of your scenario, right? I don't have to count that against you. It can't be an account that you're on. It can't be an account that you have access to. But if your mom's paying it out of account that she's the only one on and she's the only one paying for it, we can take that out of your scenario, and now you qualify for more. So that's just an example of something that gives us a chance to get in front of these challenges or unique scenarios that not everybody is accustomed to. So really just a situation where people get a chance to know where they're at, know what they're able to qualify for, and know what we need to get in front of as they're becoming, you know, more involved in the process. Things to kind of be aware of as you start the process. Credit, really important. Understanding your assets. So if you're going to put money down, what that looks like, how much money you're going to be able to put down. The other part is your income. I mean, everybody's situation is different. If you're W-2 and your full-time or salary is super simple, right? That's easy to calculate your income. But if you're somebody that's heavily commissioned or you're somebody that gets large bonuses every year, we want to make sure that we are able to calculate those out correctly. And obviously, if you're self-employed or an independent contractor, 1099, we want to make sure that we get a chance to go through those scenarios because typically we have to average out what those incomes are. It's not a super complicated thing, but it is something that's worth getting in front of if you have any of those scenarios, right? So let's run through the documentation that you're going to need most of the time. If you're going to get pre-qualified, I can never say it right, pre-qualified or pre-approved, there's a couple ways we can look at making it happen, right? We're going to need pay stubs if you're W-2. We need your last 2 years of W-2s. We'll want 60 days of your bank statements, and we'll want to pull your credit report. That's pretty simple information there. Nothing too crazy. We can make that scenario happen. Figure out what it looks like in terms of you being qualified. If you're self-employed, it's a little more in depth, right? 1099, it's a little more in depth. Things that we have to get in front of. Self-employed tax returns. So if you're a single member LLC or your sole proprietorship, most of the time your personal tax returns will have all the information that you need in them. There'll be something called a Schedule C. It's a profit and loss that we can kind of figure out the amount of income that you're actually taking, right? And this is something that we always have to talk about with self-employed people is they'll come in and say, hey, I make $350,000 a year. I'll get the tax returns and they make $24,000. And you're like, how is that possible? Well, they might have did $350,000 in sales, but then they had a ton of expenses, whether that's, you know, leasing a space or equipment or just expenses, cars, whatever. There's a ton of stuff that they're able to write off. With that being said, you want to make sure you go to somebody who knows how to work with those clients, right? Because there's things that can be added back to their income. A couple of things that can be added back right off the top: depreciation, depletion, mileage. Those are all things that can be added back to their income. So though it says, oh, they only made $24,000, after I add back depreciation, after I add back mileage, now they're at like $75,000. Let's just use that as an example. That gives us an opportunity to help them qualify for more, even though they wrote off a lot. I would preface this and say, if you're planning to buy a house and you're self-employed and you know those margins are tight for you, maybe think about what you're writing off. I'm not telling you what to do. I'm not a CPA. I'm not trying to be a CPA, but I would certainly say if you need to qualify for a loan, the bank is going to look at your scenario no different than the IRS will. So whatever you give the IRS, that's what you're giving. That's what you're giving us, and we're going to go off of whatever you're telling the IRS. If you tell the IRS you only made 24,000, then hey, we're going to go off of that. There are a lot of unique scenarios that people can look at in terms of like non-traditional lending. So you can talk about like hard money, private lenders, things like that. I don't work in that space, so I'm not going to speak to that scenario specifically. There's options out there, but typically, they are not the easiest to get a hold of. Sometimes they don't care. They're only worried about, what the deal presents to them in terms of equity in the property or what rate of return they're going to get back on their investment. But lots of times they may require, significant capital up front. They may want to check your credit. They may just want to be in a position that they're comfortable with lending you the money. And if you don't have a history of, buying properties or whatever the case may be, it might be a little more challenging in that scenario. So no right or wrong, but just another, I guess, option to kind of think about as you're going through things. Most people end up going the traditional route because most of the time the terms are better, right? So you're talking about buying your first home. If we're touching on that, first home's not a bad scenario for most people. You think you have to come with a bunch of money, you really don't.
Let's talk about that process though.
Talk to me, man.
For buying that first home, right? So for me, right, I didn't know where to start. Like, I'm gonna be honest, I didn't know like if I should get in contact with a realtor first, if I should talk to an LO first. Obviously now I know who I should talk to first, but what would you suggest? Like, if somebody was just now starting to buy a home, what would you suggest of who they would speak to first?
9 times out of 10, it's going to be the LO, right?
Right.
Because that's going to tell you how much you can afford. A realtor could go out show you 1 million properties, but if you can't afford any of those properties, then what kind of position are you going to be in?
Right.
There's no point in looking at a $500,000 house and you can't afford it. You're stuck at 400. You're looking at the wrong price point. That doesn't make sense. You're just going to be, spinning your wheels.
And I think that's apparent, like, right? So it's like you said, if you talk to a realtor, they can take you to wherever, right, to look at a home. You can tell them, I want to live in this area, I want to spend this much, whatever that scenario looks like. And they do that, and then there's a lot of people wasting their time because once they're like, okay, well, let's go try to get you pre-qualified, and then at that point, like, oh, no, you don't even qualify for half of that, what you're looking for. Now you got to adjust your plan. So whenever you're buying your first home, so you already kind of went over, like, the difference between a pre-qualification versus a...
Not yet. Not a pre-approval.
Pre-approval. Mm-hmm. So what's the difference between the two, of a pre-qualify and a pre-approval?
Pre-qualify is you basically just going in, submitting an application, sending a few documents in, and your LO, whoever's working it, is going through and reviewing it and say, based on your credit, the documents you submitted, from what I can tell, you'll be able to qualify for X, Y, and Z amount. So that's me saying, I can go in, I verified your credit, I may have there's what's called an automatic underwriting system that tells you like, yep, the likelihood that the loan will get approved is very high. Perfect. We think it's going to get done. There shouldn't be any issues there. If you have an LO that does this a lot, that's a pretty simple process and you should be able to trust that. The scenario that you run into, though, is a lot of times people will just do stuff online. Something will come across IG or Facebook, and they're like, well, let's see what you can qualify for. And they'll put their information in, and it'll spit out a number. But what they put in, there's no way to really anticipate what's going on, right? So it just spits out a number without checking any documents. So you don't know that person is self-employed. You don't know that person has high commissions. You don't know if that person has like a debt that you can take out of their scenario so they can qualify for more. There's a lot of different scenarios that come across when somebody's doing any kind of pre-qualification that you would better be served if you had somebody that can actually look it over, find out what the situation is, and also the programs that you qualify for. So, everybody thinks like there's 30-year, 20-year, 15-year. Man, there's like 10 different 30-year programs for any one person. It's insane. But the job of the LO is to really find that scenario that best fits the person that's going to be trying to buy that property, right? So that's kind of the game plan for that. A pre-approval, though, is legitimately somebody saying, I want this to be underwritten, which is how you get final approval for an actual loan. Is an underwriter goes in and says X, Y, and Z looks good. We've checked all their documents, credit history. We know they have the money for the down payment or whatever the scenario may be, and we'll have no issues closing the loan. That makes things significantly quicker in terms of your turn time, but also, for sure, as long as everything remains the same, you're good to go. You'll be approved. You won't have any issues. You just got to find a property, get an appraisal done, get ready for closing, essentially. So,
right.
Not a bad situation.
So, for people that don't know what an LO is, LO means a loan officer. So it's really two people you're going to be in contact with. One is going to be the loan officer, so the person that's going to be handling like your loan, making sure that you're able to qualify to purchase the home, all that good stuff, and making sure everything's good to go, right? And then the other person you're going to be speaking with is your realtor. Your realtor is going to be the person that's negotiating like your price on your home, all that good stuff, showing you the homes that you're looking to do, and all that good stuff. So they're pretty much the LO's working on the back end versus the realtor being on the front end. Is that how you would like explain that, or what? What else?
I mean, I think that that makes a lot of sense. The reality of it is, in most cases, you need both of them to make it work, right? If you're buying cash, you don't need me, right? If you're buying a cash scenario, you got all the bread saved up, you don't need an LO. You're all set. You just find your realtor and make it happen. And sometimes you see situations where people do it without a realtor. Doesn't happen extremely often, but sometimes they go in and they want to do like for sale by owner situation where they don't have any realtors involved, or they just go with the listing agent's realtor. Just kind of depends on your unique scenario and what that actually looks like when it all comes along. So no right or wrong way to do it.
So, folks, we got a question. Someone's asking,
Go for it, man.
can I use the remainder of my VA loan on a second property?
Yeah, so if you have enough entitlement, you can. But typically on a VA loan, depending on like what price point you bought it at, that entitlement gets used up pretty much on whatever VA loan that you have. It is very hard to carry two VA loans. Most of the time what has to happen is you would refinance out of the VA loan into a conventional loan if you want to use the VA loan again. So you have that full entitlement. The other thing that you have to be aware of is most people, when they buy a house with a VA loan, the VA funding fee is waived, right? You don't have a VA funding fee most of the time based on, it's called a DD 214. Tells you like what your eligibility is, if you'd have a fee for using a VA loan, things like that. But there is something called a subsequent VA usage fee. So if you use the VA loan immediately after you just had a VA loan, they could hit you with that VA funding fee because you're using it back to back. A quick way around that is if you're able to refinance, get into just a traditional conventional loan, then you free up that VA loan to be used again, and it's not technically a subsequent use because you already have another loan in place before you use that one again. But something to certainly be aware of if you're trying to go that route, the VA route. The best thing about the VA loan, which everybody loves, is there's no down payment. So you don't have to put any money down. And even though you don't put any money down, you don't have mortgage insurance. And that's the thing that, a lot of people are, reluctant about. They don't want to have mortgage insurance because when you don't have 20% equity in a home that you're buying, a lot of times you have to have mortgage insurance. Now, I will tell you this, working at the bank, we have several programs that will allow you to buy with as little as 3% down and not have mortgage insurance. That is a conventional deal. That is a scenario that is, not at every institution, but certainly something that we offer. The rates are not going to be the same for everybody. Everybody's situation is a little bit different, so you just got to keep that in mind. And please, when I'm addressing all these different things, you don't have to take what I'm saying as the gospel. I'm just telling you what it looks like. So there's always unique situations where you can make something happen in one scenario or another. Everybody's situation is a little bit different. But when you're talking about using like the VA loan, amazing loan, super worth, exploring when you have the opportunity to do so. Just has to be a situation where you know what comes afterwards. So lots of times, as I mentioned, people will buy their initial home with a VA loan, and many times they'll refinance out of it. They'll get out of that VA loan into a conventional loan so they can use it again when they upgrade their house. And you do that most of the time. Why? Because you want to keep the house that you had before, right? So that's typically that scenario. You want to make that a rental or whatever the scenario may be. That's a really good way to do that. I had somebody that I was talking to the other day. They want to look at, using their VA loan again, but they want to keep the house as a rental. People forget, like, there's so many ways that you can use the equity in your house without selling it, right? So I'm going to tangent off a little bit, because if you want to buy a rental property, that's great, but it is going to cost you a lot up front.
How much does it usually cost?
20% down is like typical. You might find some places that'll let you do 15, but the rates are not The rates are terrible. I'll be honest with you. That the environment where you could get rental properties with the low 3 rates is gone. I mean, being transparent with you, that's just not happening anymore. It's a very tough scenario now. But the way around that is, why not keep the house that you have and make that the rental? Like, if you're gonna upgrade your house, if you really want to start getting investment properties, you don't necessarily have to like go buy an investment property if you can just transition the house that you had before to a rental. All right, you upgrade your home, you're going in a different direction. Great. If you want to keep the other house, leverage the equity in that house. You don't have to sell it for the down payment on a new one. The only thing that you have to keep in mind outside of being a VA scenario is, if you're buying another property and you own a property and you're not a first-time home buyer, you're going to have to put at least 5% down. You can go the FHA route. They'll let you do 3.5. You'll have some things like mortgage insurance, different rate, likely a higher payment. But if you go conventional, 5% down, pretty simple scenario. People are like, well, how can I get that 5% if I don't sell my house? I don't have it in savings. I don't have the ability to like cash that out somewhere. I would tell you that the best scenario is you go get a home equity line. Most of the time it costs you nothing to set one up on your house. It gives you access to the equity in your house without having to sell it. So you would have a line of credit tied to the equity that you have in your house. Obviously, you still have to qualify for it and all those fun things. But if you're able to do that, that'll easily give you the down payment. You get that money, you put that down, you get to make the other house a rental, and you get to buy the new one. And some people are like, well, how can I do that? I can't qualify to carry 2 mortgages. Most people can't, right? But if you make your property a rental and you get somebody to sign a rental lease agreement with you before you close on a new one, and it's a long-term rental situation, they're going to sign on it for a year, right? You can use 75% of whatever that rental agreement is to qualify, I guess is the best way to put it, towards the new mortgage on the new house. Well, let's use some real numbers. That makes it easy for people, right? Say your mortgage is $1,200. You're going to go buy a new house. You're going to set up a rental lease agreement with somebody that's going to rent your old house out, and they're going to rent it for $2,000. Reality of it is 75% of that $2,000 is $1,500. So that's more than enough to offset the mortgage that you already had. Now, we'll offset the mortgage that you have. We won't give you credit, the extra $300. We can't give you credit for that in terms of income, though, because you don't have a history of being a landlord. We don't know what would happen on your taxes, what you're going to write off. There's a lot of different factors in that. But we don't care. As long as you have the rental lease agreement, we'll offset that mortgage payment. And now all of a sudden, you just got to qualify for one property. That's it. So if you can make that scenario work, man, that's a hell of a tool. That's a hell of a resource to get somebody from one house to another without them having to sell their prior residence. And it's something that I wish people knew a little bit more about, because if you're able to leverage that, especially in this environment, rents are high, people's houses are going up in equity, people's housing prices are going up. You might need to leverage the equity in that other house to put more money down on a new one. That could save you a lot of effort if you get into a situation where the house doesn't appraise or you have to go significantly over asking. Man, what a tool that is, that somebody could use the equity in their old house to help them buy this new house, and it doesn't really cost them anything. Not a bad situation at all. I can get like super in depth about like what those products look like and how that works. But just a really good scenario all the way around, right? Go ahead, Ben.
We got another question from King of Crash. And it's just your perspective on how do you feel about the process of new builds and first-time home buyers?
I think new builds is a good scenario if you have time, right? New builds right now are taking some time. I mean, you're looking like, it used to be like, all right, we might be done in like 6 months, 7 months. Now it's like 9 to 12, depending on like the type of builder or how like extravagant your home might end up being. It could be longer. I think it's a good situation if you want to lock something in now. You don't have to worry about like bidding and doing different things like that. A new build's not a bad play. It's just location most of the time, because where can they build new homes at? They got to push them further and further out. They're not building them in the middle of the city. So if you're talking about like a new development like that, that's a little bit tougher. But great scenario for somebody who doesn't want to get into a bidding war and is tired of like going through the scenario of trying to find different houses to look at and putting in offers, and they just haven't been super successful.
How does the pre-qual work with a new build though? Because I know like with new builds, right? So whenever somebody's buying a new build, usually they're stuff they can do to upgrade their home, right?
Yeah.
So they come to you saying like, hey, like you pre-qualify for 500 to make the numbers easy,
Sure.
right? And then they get into it like, okay, the new build costs 400, right? And
Yep.
then upgrades they want in there can get over 500 easy, right? When it comes to those upgrades, how does that look? They just pretty much just downgrade whatever they're looking for, or do you relook at it, or how does that look?
I mean, it kind of depends on the scenario, but I would say most of the time you just tell them what the max amount they're going to be qualified for. The hard part in this environment, though, is with rates moving so much in such a short period of time, and they're going to continue to go up. It's eliminating some people's purchasing power, right? So what's going to happen as we get towards the end of the year, people that went under contract on new builds, if they were at their absolute max, when we were going through whatever the situation was, I try to give people room in terms of rate buffer because I know what's happening, but not everybody will give you that same buffer.
What's
If
a
they were
buffer?
just like, so say you're qualified for simple numbers, right? 500,000, right? If that's the number, I would try and qualify you at $500,000 with a rate like 0.25% higher than it is now.
Okay.
Because, you know, God forbid things really take off and rates go higher, all of a sudden you don't qualify. That's not a good situation, because now, you know, you're in a scenario where you're scrambling to figure out a way to make it work. Can they make more money? Do you have to add somebody else onto the loan? Can you eliminate some debts to make them qualify? Those are all like viable options that you can explore at that point in time. But if you at least you have somewhat of a buffer, that gives you some room, you know, should that be the case.
So we got another question here, Stokes.
I'll go
from
for it.
TL Fear. His question is, if I wanted to buy a first home out of state, he lives here in Colorado,
Mhm.
and not live in it, potentially rent it, would the FHA work?
Nope. And the reason being is to do FHA, you got to be buying it as a primary. You couldn't buy it as a rental. The only like caveat to that is if you buy a multifamily, you're gonna live in one of the units, and then you're gonna rent the other ones out. That would be an opportunity for you to be able to go the FHA route in that situation. But for this specific scenario, for this person, they couldn't buy a property out of state as their primary if they don't have. So two ways that's going to be complicated, right? You can make it work if you work remotely and your job is going to sign off that you only work remotely. Like you never have to go into an office. You work remotely. It doesn't matter where you work in the world, where you live in the world, you can make it happen. You can work. If you have a job that's tied to the state that you're living in, it won't work. The only way that it'll work is if you buy it as a rental. So if you're going to buy it as a rental, that would require 20% down. So much different scenario than FHA at 3.5. You could potentially look at buying it as a vacation home, but if you're going to buy it as a vacation home, that would be 10% down. And now you got to qualify for the payment on the vacation home, and they're going to count if you're renting any rent lease scenario that you have against your debt to income to help to ensure you qualify. So if you're trying to buy out of state but you live in a different state and it's not going to be your primary, vacation property, investment property, those are your options. If you want to buy it as a primary, you either have to work remotely or you have to go have a job lined up in the state you're trying to move to. And I don't mean like, oh, I'm going to buy a house and then I'm going to find a job. I mean like, yo, I work for Amazon corporate and they're transferring me to Tulsa, Oklahoma, and that's where I'm going to work now. And your job sends a letter saying that's what's going to happen. That's a real scenario that somebody can get in front of. So, yeah, I would definitely pay attention to that scenario and what that looks like. It's not impossible, but again, you really got to pay attention to what you got going on. Everybody's situation is going to be unique. Everybody's scenario is going to be a little bit different, but I want to make sure that people know, that is something that would be very challenging to pull off if your job's not remote.
So we have another specific and unique question to one of the folks on your IG Lives.
Okay.
Their credit score is currently 703.
Okay.
The question is that significant, or do you recommend continuing credit building for max approval and maybe a lower
Nah,
approval?
shoot your
shot.
Shoot
your shot. Shoot your
Curry.
shot. Don't wait.
Steph Curry.
Don't wait. Go get qualified now. Let's get it done. Why? Because if you keep waiting, rates are just gonna go up. I'll give you a real world example. I think in December I was quoting somebody that had like a 680. And I think at that time I could get them a 30-year at like 3.375. And they're like, no, I want to wait. I want to get my credit up. I need to be in a position where my credit is better. Well, now their credit is better, significantly better. I think it's like 726. The rate now, even with a 726, 3.75. 3.75. That the cost of waiting was expensive because they were trying to get their credit right. It didn't make sense. The people will ask me all the time, when's the right time to buy? When you can afford it. If your credit works, your income works, you got a little bit of money to your name, and you want to buy a house, go buy it.
That kind of leads me into this next question. I get this a lot, man. I argue with people all the time about it. And the question is like buying a buying market versus a selling market. Like, I know you have a better explanation than I do. I don't really see a difference. I was like you said, like if you qualify, go for it.
Yeah.
But define that first, and then explain like what would you do in that scenario?
Super simple,
both
right?
scenarios.
Seller's market is what we're in now. So the sellers they have all the control, right? You're gonna have to go over asking. You might have to do some stuff with the appraisal. You might have to deal with some stuff on the inspection. But the sellers have more control. Why? There's more buyers than there are sellers. So when you put your house on the market, it's going to fetch a significant premium right now. There's not much you can do about it. There's not enough houses to offset the amount of people that are trying to sell their house. There's way, way more people trying to buy. In a buyer's market, there's more houses than there are people trying to there's more houses to buy than there are people selling, right? So I'm sorry.
No.
Let's say that right. There's more houses for sale. My math is all messed up, right? There's more houses for sale than there are people buying. So there's not as many people out buying. So the buyers have more room, more latitude. So a good example is like 5-6 years ago, right? People could go in, the price is $560, they offer $535. The seller's like, okay, great, I accept it. You go to inspection, the seller's like, I don't want to fix anything. The buyer's like, well, I'm not going to buy it if you don't fix anything. And the seller's like, damn, well, what do I need to fix? And then they negotiate it out and they fix a bunch of stuff in the house. Now, if you ask for almost anything, you're lucky, most cases, if they're willing to go ahead and negotiate with you and see what it looks like. I'm not saying it's impossible, but I'm just saying the person who has most of the power in the environment that we're in now, sellers, but
Not enough inventory.
So,
and it's gonna be like that for a while.
we have a question from Dave's YouTube.
Oh, my boy Rambo Savage. Hey, what up, Rambo? YouTube, I apologize right now. The camera I have, it just completely shut down on me for some odd reason.
Yeah. It got enough of Dave's face.
I
And
know.
it was like, I'm
it
done.
It got tired of looking at me.
I'm over it.
It got tired of looking at me. But you still can hear me. I want to go ahead and shout out my boy Rambo Savage. His question is, how much buying power change is there between someone with a high 600 score compared to someone at a 750 with the income being 60,000 for both?
So just the difference in those two scenarios?
Rambo, are you asking, because I know he's married, so are you saying with you both being on the loan, you and your wife, or are you saying two different scenarios if you was to do it individually? Let's talk about both scenarios.
So
if they was both, let's say.
So if they're both on it, the way that it has worked for the last plethora of years is whoever has the borrower with the lower score, you take their middle score. That's what they use for the application. So the rate's based on that. The programs that are allowed is based on that. That's how that works. What was just rolled out recently on Fannie Mae scenario is now they're allowing people to average those scores to help them qualify. Now, I have not seen it work in real time yet. I haven't had a scenario where I've needed that yet, but it literally just happened like a week ago. So that is relatively new. It is something that is coming, I guess. I don't know if every lender is implementing it yet. I haven't seen it on my side yet, but I know now they're saying for Fannie Mae loans, which are conventional loans, they are allowing the scores to be averaged together to help people qualify. But if we're just going off what I know for sure as of today, most scenarios, it will be the lower score of whoever the other borrower is. So the middle score of the lower borrower. So if you have a 720 and a 650, they're going to use the 650 to qualify.
I got you.
Makes
So, Rambo, it sounds like from what he knows so far right now, they're gonna go by the person that has the lower score out of it, right? And then they're gonna go from there. But it looks like they might be putting in place to where they're gonna average the scores out. So, we'll get some more info around that once we get some more information. But
Got a question on your IG stocks.
Go for it, man.
JG Thomas 42.
Yeah.
They will be closing their first house on Friday. What should they expect at the closing?
Well, since you didn't use me, I don't know. No, just kidding. Just kidding. Just kidding. I would tell you today is what, Wednesday?
Yeah.
So they probably already sent you the closing disclosure that you're supposed to review when you're closing. 3 days before you close, you get the closing disclosures and the documents, the settlement statement saying what your loan's supposed to look like on Friday. Now, it is not always going to be 100% accurate, but it should be on par with where things are at. The title company may still balance some things out, prorate some taxes, maybe some seller credits. Those things will be added onto your closing disclosure. It shouldn't shift very much from what your lender already sent you, but that's just kind of what to be aware of. You should, if you haven't already figured out, if you're bringing money to closing, how much you're supposed to bring, how you're going to get it to them, wire, cashier's check. If you're getting gifts, who's sending the gifts, when they're sending it. All of that is like super important before you get there, or it could be very problematic for you. So just make sure you know what's going on. Put yourself in a position, get your IDs ready, bring them. You're going to be signing a lot of documents. You may have to e-sign a couple of documents before closing the day of, but man, you're at the finish line, so you're in a good position, man. You did everything you're supposed to do. Now you just got to sign the paper, get the keys, and make that house yours. That's it.
Congrats, JG.
Yeah,
Nice to see you, my guy. I see you.
Run it out.
And we got another question on YouTube from Izzy Baby. Are you seeing an overwhelming amount of loans where individuals are bidding higher than the asking price?
Yes.
That's it?
Yeah. If you, yes. To be honest, that's an absolute. That is a thing. That is not. This is the way I put it to you. I'll give you the most transparent answer, most real answer I can. In this environment, the asking price is really a suggestion. That's like the starting price. And now you determine how much you really want it. Like, I'm willing to go $5,000 over asking. I'm willing to go $20,000 over asking. I'm willing to go $200,000 over asking. You say, oh, that's a crazy number. It's not. It's not. I've seen it. And I will tell you this. Do what you're comfortable with. If you find the house of your dreams is going $50,000 over, gonna hurt your feelings, the house will probably appraise. I'm not an appraiser. Don't quote me on that. I don't want no liability. But I'm just saying, chances are in this environment, the house will likely appraise. Are you really out anything? I mean, if it makes your family happy, if you're comfortable with it, if it's great for your kids, if it's great for your dog, whatever that is probably more important than what that scenario looks like. So,
this is how I kind of like look at that. Like you said, like if that's gonna like your dream home, right? It's worth it because if that's your dream home, you're most likely gonna be there for some years, right?
Even if it's not your dream home, do you want to live in the house or not? I'm not being funny, but
that too. No, I get that.
Do you want to live in the house?
Like,
yeah,
if it's gonna be like that's the house. Like, yo, this is it. Like, you see yourself being in there for some years. What is that 50,000 to you right now, right? Like, houses are going up. They're just going up. They're not gonna go down anytime soon. They're not gonna have any corrections anytime soon, right? So you're gonna earn that back in your equity regardless, right? So it doesn't really hurt you. I mean, if you're looking like if you're struggling for like the down payment part of it and things like that, that might be different. But that's when you get into you ask your LO about that and whatnot, and kind of just go from there. But another thing, like for me, right? I've always had that, like starting out, honestly, I was like, I'm gonna get into a house and it has to be the one. When you're first buying your home, it doesn't have to be the end all, right?
Yeah, we need to
just
talk
think
about
about
that.
it.
We gotta talk about that. Well, it's not to be like mean about it or nothing, but your first house is not gonna have everything that you want unless you're balling.
But this is like I'm saying, like a lot of people thinks this way, right? To where I want to get into that home, like that dream home.
Yeah,
that
you can get
dream
it though.
home.
I'll take that back.
It's
You
not-
can get it, but you gonna pay.
You gonna pay for
It ain't free. You gonna pay.
But this is, and for me, like specifically, I had to get out of that mindset, right? Because when you're renting, like I'm not sure who's renting on here and who's not. You're renting. You're most likely moving every 2 years, right? When it comes to like renting, because the rent's gonna go up. You don't like the area or something change, right? When you're buying your home, like that first home, right? Most people stay into that home maybe 5 years, right? Because once you get in that home, and for me specifically, I like the house I have. I have a nice looking house, right? But I don't have the storage space I want. I don't have a garage like I want. I get tired of shoveling this stuff because I don't have, so I don't have the space to get like a snowblower, right? You don't think of that stuff until you're in your home, like, but you can use that first home to get into that next joint,
Man,
like, and that's the beauty of it. And we'll talk about that
talk
here in a
about
second.
No, we talking about that now. We
Yeah.
talking about it now. I'm for real.
But to get into that, you're using all it is you're using that first home to get into that next home, and that next home might not even be the dream home either. But it's the step up of what you have, right? Kind of like at your job, like you get into like the entry level type joint. I mean, depending on where you're at in your life, and then you're gonna move up. It's the exact same thing when it comes to your home.
He's not lying.
Let's talk about it, Stokes. Like, how do you feel?
This is my philosophy though. This is my philosophy. You can get everything you want in your house. Everything. You can get the location, you can get the walkout basement, you can get the bar, the game room, the super crazy bathroom, the craziest kitchen in the world. You can 100% get it. You just got to pay for it. Like, you got to pay for it. And in an environment where prices have moved, right? Like, they continue to go up. And I'm only going to speak from what I've seen people have to do, is you got to start making concessions, right? And I'm not saying this because I don't want people to buy the house that they want. I don't want you to buy a house that you're not happy with ever. I don't want to do a loan for somebody that feels on the fence about it. If you feel on the fence about it, I don't want to do your loan because I don't want you coming back to me and be like, I don't want to make this mortgage payment. But I think the real scenario is, as you go through the process, you'll find what's like out there and has everything that you're looking for. So I don't know if y'all ever seen these shows on HDTV. They always show people like the house that has everything that they want. It has everything. They love it. Oh my God, this is amazing. Then they ask them, what do you think this house costs? And it's like $300,000 over their budget. And they're like, now let's come back to reality at your price point. Here's what you can get with your price point. It's not bad. It's just not going to have X, Y, and Z different things unless you're willing to pay the premium that comes with those, right? And it's not a bad thing, right? It's okay to not have everything up front. You know, if you want the single family, everybody right now wants a single family house. But I will tell you this, if you waited 2 years to get the single family, you still might not be in a single family house. But if 2 years ago you bought the condo or the townhome or whatever, and you let that house appreciate and it's worth $100,000 more than it was 2 years ago. Oh, now you got $100,000 to leverage to get you into your dream house, right? Now you got the leverage to get you into that single family house. But if you never bought anything, you probably just threw more money away renting than you did anything else. And there's 100% nothing wrong with somebody being a renter. Zero. Nothing wrong with it. Make sure that you got a scenario that works for you. Don't buy if it's not the right timing, because the reality of the world right now, it's tough. Pandemic happened, a lot of things different moving. It may not be the right time for you to buy. But if you can do it, if you can afford it, it may not be your dream house, but get it. Let it appreciate. Put some sweat equity into it. Make it what you want to make it, and then leverage it to get the next one. Or buy it knowing that you're gonna rent it out, and it doesn't matter, right? All right, I live here for a year and I move on.
Right.
So speaking of on to the next one. So for folks who already have their home, and I know you answered it earlier in the call,
Yeah.
But Jameer, he's saying looking to purchase an investment property ASAP. What are some things that I need to ensure I qualify?
So, down payment for sure. Investment
20%.
property is 20%.
20%.
Investment property is high. You might find some lenders that'll do 15, but I don't think you'll like the terms that come with that 15% down. Two is making sure you qualify. If you buy it as an investment property, the same rule applies as if you were leaving your other house and you get a rental lease agreement. If you get a rental agreement in place before you close on it, they'll use that rental agreement to help offset that new mortgage, which will help you qualify. So now you're not really qualifying for two properties. You're just qualifying to keep your other one, and the rent for the new one will pay for itself. So you just got to be smart about kind of your approach in it. I don't think there's a right or wrong way to do it. I think you got to figure out what kind of house you want. You want a duplex, you want a triplex, you want something bigger, or you just trying to find a condo or a townhome that's low maintenance, or you want a single family. Do you want to manage it yourself? Do you want to hire a property management company? What do you think you're going to rent this house for? That's, I think, an even more important question is, I see people just jumping in buying rentals right now, and they're getting away with it without doing any research. They have no idea what the house in those areas rents for, how many bedrooms rents out that way. No clue whatsoever. But because of the market, they're able to still make money on it, right? If this was a normal market and you did no research, you could get killed by doing that. You could get destroyed by doing that. Because if you can't rent it out for more than your mortgage, you're paying to play now. It doesn't make a lot of sense. So, everybody's scenario is different. If you just want to get a rental, barely make enough money on it, and catch the equity down the road, awesome. If you want to get it for the tax benefits, awesome. But if you want to cash flow on it, it may be wise to do some research to find out how much those rentals are going in that area, whether you're buying in a complex or a single family. Find out how much those houses rent for. It's really easy. Go to Zillow, go to Redfin, whatever. They'll show you all. Go to, rent.com. There's a bunch of places you can go check it out, and they'll tell you what the rents are in that area. And then when you buy the rental, we'll run a schedule of rent too to make sure that you can actually get the rent that you're saying you're going to get for it. So,
and I think that's super important, right? And as you know, guys, if you're just now joining the live, we got Sean Stokes
just
here.
now joining the live at 6:50.
Hey, some people got things they got to do. They just now getting home. It's snowing in Colorado. I don't know where y'all at, but we do appreciate you guys jumping in, asking your questions. We're gonna be sure we get to all of them. If we don't, on the YouTube, we do have a link that you could click on at the top right there. So if we forgot your question or skipped it, and we're whatever the scenario is, go ahead and post it in the chat. But that forms also, if you need to get in contact with somebody, have a conversation, whether it's a different scenario, click on that, fill that out. Give us some feedback, and we'll get back to you. We'll make sure we get back to you. I have a question so VK posted on IG and YouTube. He says, are all cash purchases making it this harder all cash purchases making this a harder market to buy in?
Yes. But I think there's a misconception. People think all cash means somebody's just loaded with bucks and they're just dumping their bank account and they're buying the house. No. What's really happening, and I can tell you it's because I help people do it all the time. They're doing cash out refinances and getting the cash out, and they're combining it with some of their other assets, and then they're buying cash, right? They're not just like, all right, I'm dumping my 401k and I'm going to buy a rental. Nah, that's not the case. Or they're doing a home equity line. They're going to do the home equity line. They get the cash. They mix it with some of their other assets. They can put a cash offer in. It just makes life super easy for them, right? But I think people have a misconception when say it's an all cash offer, that they just automatically think that people are out here running around with millions of dollars in their pocket and they're just burning the hole and they're just like, I got to buy a house. That's not really the case, right? Like, being super transparent, they're using different vehicles to get the money up front from a different lending source, instead of saying, oh, I'm going to get a mortgage. And I'm going to tell you the other thing that y'all not realizing is these cash offers, they're buying the house cash. Then they say, hey, Sean, I just bought a house cash. Can I refinance it? Can I refinance it and get a loan on it now so I can get my money back? That's what's happening. It's not like people are just sitting on it and they're not getting their bread back. Oh, no. Rates are too low. Money is too cheap. Why would you implore all your cash out there if you don't have to? I'm going to go to the bank and get a loan, make my life a lot easier. I'll just get the cash up front so I don't have to worry about any contingencies, any appraisals. I'm just saying, hey, this is what we're going to do and go from there. The amount of people that are able to do that is a lot slimmer than you think, though. And I think people get discouraged when they're like, oh, there's all these cash offers, and they are. But I want people to understand that what that cash offer really means. They just have the funds available somewhere else. And all they do is after they close, they say, hey, Sean, I just bought a house cash. Can you refinance it for me so I can get my money back? And I'm like, yes, sir, glad to do it. So,
Yes, sir. Is it like that?
yes, ma'am, yes, sir, madam, whatever you prefer. I got no preference. But sincerely, that's what's really happening. It makes it more difficult if you're a first-time home buyer for sure. If you don't have a lot of equity or you don't have a lot of funds to get into a house, it's definitely tougher. But I don't want to say that to discourage people, because literally, I'm not joking, I got like 40 pre-quals out there, and I think like in the last week we got 7 people under contract. Well, five. I take that back, and it's their mortgages. They're not putting a ton of money down. They don't have a bunch of money to their name. They're putting small amounts for their down payment, and they're under contract. And I will tell you, and this is going to be kind of like a shameless plug. I am really good. I am really good at calling these listing agents and selling the financing to them.
So to that point, you have a question.
You do have a question. We'll get to that question in a second. We'll get to that question in a second. I don't want to skip over Tesh. Shout out to my boy Tesh. He does have a question that says, if I bid $50K over asking, how much will that impact my payment, assuming it appraises over $50K over asking?
If you're Tesh, it doesn't affect you at all. What do you think? Not if you're Tesh. Tell me, $50K, right? Crazy. No, it's realistically, it's probably like $200 a month. I mean, even with if you're talking about investment rates, primary rates, $50,000 is about $200 a month. And I'm gonna give you a real number. Everybody been asking like, well, if I can do this or do this, how much more does it help me qualify for? So I'll give you a real number, Tesh. Give me 2 seconds. Bear with me. So 50,000 at 4% is $238 a month. So I'm just using 4% as an arbitrary rate, but it's kind of in scope of, it may be higher, it may be lower, depending on your scenario. But $50,000 on a 30-year term is literally $238. So if you have a car payment that is $238, it is keeping you from qualifying for $50,000 more on your mortgage. That is a real thing. So if you have a $500 car payment, it is keeping you from qualifying for $100,000 more on a mortgage. Those are real numbers. Like that will help you. So go pay your car off.
All right, man. So Tash, follow what he does, man. He gave you some info. You better take it. And then there was another question from Alex. I'm not going from my guy Alex. He said, "Why should people work with you versus?"
He would ask that. It's a good question.
It's a great question.
It's an amazing
question. Why would I work with you, Stokes? Why would I work with you?
You know what? I don't want to be on here like just going hard on myself, but being transparent, I care about your house closing. And I think the bigger thing is I have no problem like trying to help you if it's beyond my scope. So I'm sure I know more people in the lending side of things than you do, right? And if there's a scenario where I can't help you, and I've done this before on large deals, small deals, and everything in between, if it's a situation where I don't have the best product for you for some reason, if that's a real life situation, I will refer you to the person who does, that I trust, that I know will help you get it done. The other thing is, this is gonna sound mad corny, but I really care that you are able to buy your house. And it doesn't matter if you're my best friend, if you're an acquaintance, if I've never met you, it's significant to me that you get to buy the house.
Oh, so it didn't matter that I was your best friend, huh? Okay, I see.
I was very happy.
Okay, you see how he does?
I was very happy
just like y'all.
That Dave was able to buy his house. I was glad that
he treat me just like y'all. But I think that's like super. It's super relevant, right?
But I think it's important. Like, but I think if you put that together with like the knowledge, the experience, the ability to really like do some different things to help people. And I'll tell you this, and I can only give you experiences that I've had. People will come to me after the fact. They'll say, "Oh, XYZ lender only gave me this option and they said I can't qualify." Well, I said, well, did they, run this scenario with you? Did they talk about if you pay this off? Did they talk about, if you add somebody else onto the loan? Did they talk about maybe making a spot a rental and using that? Like, I'll try and run through all the options and see what it looks like. And if I legitimately can't find a way to make it work, I'm going to tell you, like, yo, this ain't the time. Like, we went through every scenario there could be. and there's no viable way to make it work unless you want to drop your your purchase price significantly, or you want to change jobs or something like that. But I'll be really transparent with you and say, like, hey, you might have to get, ask for a raise. It sounds really crazy, but in this environment, it's not really, too hard to press. You might need to ask for a raise. You might need to go get another gig, that pays you more. And I'm not trying to throw no shade, because you might really love your job, but like, if this is really that important to you, and buying a house is what matters the most in this scenario, my job is to tell you what would work, what will make it happen. And I'll give you all the options. Maybe we need to look at a different loan term. Maybe we need to do an ARM instead of doing like a 30-year fix. Maybe we'll, there's a lot of different ways that I try to help people qualify for stuff. But I think that's the biggest thing, is give the clients the option. I'll let you make the decision. That's not going to change. You're the one that's going to pick your loan. I'm not going to pick it for you, but I'm going to give you the options and let you make a decision on what you want to do. And if you really go check my reviews, like, no lie, like, you can check my reviews, see what people say, if they enjoy working with me. My availability is probably unmatched. And I mean that for like the realtor side of things. Realtors are like, if you work at the bank, you're only available 8 to 5. Well, I feel like my job's a lifestyle. I work 24/7. So
this man don't stop, Jack.
stop.
We've been on vacation. This dude still
don't have no choice.
drinking and still talking to clients.
Man,
I'm not saying that I advise that, but hey, he does, man. So if you're looking to buy a home, or you're looking for just more information, like I said, on the YouTube channel, there is a link at the top. Did you post it did you pin it?
I think so, man.
You posted it, or did you pin it?
Shameless plug. I don't know. I'm not a technology person.
Oh my God.
I know how to use the mortgage systems. That's it.
Ben, you
Instagram.
sent it to me already, right?
Yeah, I sent it to you.
Facebook.
I'll post it, and hopefully he knows how to pin. We'll figure it out.
I'll make it work. Don't worry.
But yeah, man. Great information so far.
Sincerely.
Let me go ahead. Is there any other questions we have, Ben?
I think we ran through them all.
Nice.
Ran through them all. Stokes, I know we received some questions offline.
Oh yeah, that was.
What are some questions that offline that we haven't touched on that we can
let me go
touch back on?
Let me run to it real quick.
Go ahead and pin that. Let me pin it for you, because you.
Oh yeah.
Stokes is old, chat. I'm sorry that you have to deal with this, man.
I'm not that old.
Pin comment. There you go. Can you click on that? Is that an active link?
I think so. Okay, so somebody asked me about capital gains, right? If they sell their house, like, oh man, I'm gonna have to pay capital gains. Not if it's you by yourself, the first $250,000 of proceeds, you don't have to pay capital gains. If you're married, the first $500,000, you don't have to pay capital gains. I am not a CPA. Go talk to your CPA to make sure that you don't have any issues with that, but that's the typical standard for what that looks like. People asking about how much do I need to save? So that's a really good question. Most programs, if you're a first-time buyer, you need 3% down. You can do FHA, which is 3.5%, but you can do a conventional loan, believe it or not, and only put 3% down. That's amazing. Well, if you're buying a $300,000 house, that means you need $9,000, right? There's a lot of programs though that will help you cover that down payment. We offer American Dream. That's a great program. It is a conventional loan, 3% down. You can have a credit score as low as 620, which is right on par with like FHA. You can't have a bunch of stuff on your credit, which is kind of tough for some people in that space. But if you have really clean credit or a good score and you want to do a conventional loan, 3% down, that is an amazing program. They will cover the whole 3%. You don't put anything down for the down payment, but you do have to cover closing costs, which in reality is about 1.5% of whatever your purchase price is. So if you were buying at $300,000, it's probably $4,500, give or take, as an estimate. It could be lower than that, but I'd rather just kind of give you that on the high side. FHA, you can always use CHAF if you live in Colorado. That is 3.5% down. They will cover 3%. They tell you 4, they charge you 1, you end up with 3. So just so you have an idea in terms of what that looks like. It is an FHA loan. You will have mortgage insurance. The rate's not terrible. American Dream actually is amazing because you get the assistance and you have no mortgage insurance. Rate is higher, but your payment 9 times out of 10 is lower because that mortgage insurance is kicked to the curb. So not a bad scenario. If you just are rolling in dough and you want to put, the money down yourself and you have it, 3% conventional is amazing. You'll get a good rate. You'll get relatively good terms. Not a bad situation at all.
So if you in Scrooge McDuck mode, then go ahead and do that.
Yeah, if you got the juice, I ain't
If
gonna
you
hold
got
you.
the juice.
I ain't gonna hold you.
We do have a question for Jay Clark. What up,
Oh,
Clark?
look who it is.
What's an appraisal gap?
Sucks. Sucks. So realistically, it's just saying that between what you offered to pay for the property when you went under contract, and what the house appraises for, you're gonna cover it. It can be a certain amount, or it can be the whole amount. You discern, you kind of discern what you want that to be with your realtor when you put the offer in on the house. But the appraisal gap in this environment is almost a recommendation from realtors, because just to make yourself as competitive as possible. But sincerely, it's saying, I'm gonna buy this house for $550. It was listed at $500. I'll do appraisal gap for $40,000. If it doesn't appraise at $550, you have to cover that $10,000 gap. If it appraised at $540 or whatever the case may be. If it appraised at $500, you'd only have to cover $40,000, not the whole $50,000, because you did a $40,000 gap. But certainly something to be aware of in this environment. It's almost kind of typical now when you're putting offers in on houses, because most of the time they're going to be over asking, and the seller wants to be assured that if it doesn't appraise, you're still going to cover the difference, and he's going to get all of the money that he thinks is coming to him. So, or her, or them. Yes.
Yeah. I got another question for you.
Shoot it,
This
Dave.
is from Simbala. Hey, Auntie.
Simbala.
Can he coach me on how to buy commercial properties with no documents?
Ooh, nope, can't. Not commercial. I don't work in the commercial space. That is a completely different animal, completely different entity. They don't really work in the like, oh, are you qualified as a buyer? Most of the time it's based on like, does the property that you're buying cash flow as a commercial property? Is it going to make X amount? When you get on the commercial side, it is much less emotional, much more just, does it make sense, dollars and cents? Doing it with no docs, don't know. No docs is hard for a lot of different things. You see it on residential stuff from time to time. The terms are not always the best when you go no docs, because they are no docs. They feel there's more liability, so they recoup that in interest much quicker. But yeah, commercial side, not my area of expertise. I certainly can recommend you to somebody, aka Alexander Francis.
Hey,
he does that. He does that.
Hey,
He's
Alex.
good at it.
I'll get you in contact with her, Alex. Just hit me up, man. And we can kind of talk through some things and see if we can help her out, man. But yeah, there goes your answer, Auntie. Jameer has a question. This is for my military people. What advice would you give to anyone with the opportunity to access to a VA loan?
Use it. Best loan you can get. Like, it's not.
Why is it the best loan? Like, what makes it the best loan?
No money down, no mortgage insurance, super attractive rates. There's a lot of different caveats that make it make sense. Even with the VA funding fee, if you're not entitled to the whole VA loan without the funding fee, like even the funding fee, if you don't have to put any money down out of your own pocket, they'll roll the funding fee into it over the value of the house, and you still can buy the house. It's an amazing scenario for those people because they've earned it, right? Like, it's not a, oh, you just get it. Like, they earn that. They should be able to do something like that. Sometimes I feel like it's not enough, but they earn the right to have that kind of scenario. So the underwriting is easier. They are a lot more lenient, I guess is a good way to say that. I'm not going to say that they can't do anything, but they can do anything. But you got a lot more leverage when you go with the VA loan. The tough part is you can only do it, typically when you buy your primary property, and then you got to figure out what you want to do down the road. But an amazing program and product. Most lenders offer it. Great scenario.
Speaking of other products, man, I don't think people know much about HELOCs, right? What a HELOC is home equity line of credit, guys. So a lot of people, if you already own a home, utilize this. I'm gonna have Stokes jump into what that is, what it looks like, and why you should utilize it. But it's like he was speaking to earlier, people just refinancing home, taking cash out to purchase a home, you can essentially kind of do the same thing with your HELOC. So can you go into that a little bit about HELOCs?
Yeah, home equity line of credit is like an amazing product that many people get to take advantage of if you have some equity in your house. And I think the nice thing about it that people don't really realize is it doesn't do anything to your first mortgage. Your first mortgage, if you got 3% as your rate and you decide you want to do a home equity line, you get to keep your 3% rate on your first. You get the HELOC, and it's just a line of credit. It allows you to borrow against it as you need to. You can pay it down. You can use it again. And I guess a good like scenario to explain it is like a giant credit card tied to the equity in your house, because you can pay it off and then use it all over again. Say you needed to finish a deck and it cost you 30 grand. You got a HELOC for 50,000. You use the 30 grand and you pay it off 2 years later. You can still access that same HELOC and that $50,000 whenever you want after the fact. It's an amazing tool. The nice thing about it for most people from a cash flow perspective is the interest only payment. So on most loans that you'll ever do, you'll have to pay principal and interest. On a home equity line of credit, the requirement, your obligation is to only pay the interest that's owed on it. And it cuts your payment in about in half. So an amazing scenario to just leverage your money and make it work for you instead of you having to pay for it all the time. So I would certainly consider that. Even if you don't need it immediately, I always try and tell people it's easier to get it when you don't need it than when you do, because when you need it, it always seems to be harder to get. So take advantage of the ability to tap into that equity in your home if you've never done it before. Most of the time, there's no cost involved. If you never use it, you never pay any interest on it. It just sits there. So it's amazing. I would recommend it to everybody.
All right, so there's that for HELOCs. If you have more questions, drop questions in there, guys. If you're just now joining the live, we got my boy Sean Stokes in the building. My name is DPG on YouTube, but I also go by David Pierce, all that good stuff. We do have another question by Izzy Baby. Is it possible to purchase a duplex in an FHA loan if one of the units is already in a lease?
Yep. Yeah, you can certainly do that. Okay. They'll use the lease that they have as income towards you qualifying. So yeah, absolutely. You can do FHA all the way up to a fourplex if you want to.
What would that process look like?
Just getting approved the same way. The only difference is on a duplex, triplex, quadplex, whatever the case may be, they just want to make sure that you have enough income to either qualify for the whole thing by yourself or using the rent from each of the tenants in each of the other units. So yeah, absolutely you can.
There you go, Izzy. Got another question from Simbala. Can you tell me more about a 1031 saving to buy a house in the future?
Like a 1031 exchange?
I'm assuming.
So a 1031 exchange really just helps people save on taxes, so they don't have to pay those taxes when they sell an investment property. As long as they identify another property within the next 45 days, they got to have like 3 options, or they can have up to 3 options, and then you have to close on it within the next 6 months. So the caveat to it that makes it amazing is you do the 1031 exchange, you skip out on paying taxes because you got that money invested into another property. Typically, it's a larger property. After you sold the other one. So not a bad situation at all. Saves you a ton of money in taxes. Like all that capital gains, you'll save that for sure.
Cool. Paula, if you want us to ask any other questions, answer anything else, just hit me up. I don't see any other questions.
She got my number. She know how to get a hold of
him. You know how to get a hold of him. You know how to get a hold of him. Yeah, any other questions you got over there that... I don't see any in the chat right now, so.
Nah, I'm just gonna run through some of the stuff that we had on the
docket,
like the pre-question stuff. So they had a VA loan, they had buyers versus sellers programs out there. Oh, will refinancing my auto loan mess me up from getting a home? Probably not if it doesn't kill your credit. It might help you if you drop your payment. Lots of times we see people with really high auto loans, and I sometimes need to recommend that they get that auto loan payment cut down. And many times they're able to. You go to a longer term, that'll drop your payment. That makes a lot of sense. Makes a lot of sense for a lot of people for a lot of reasons. But if you're trying to buy a house and that's the one thing that's keeping you from getting to the price point that you want, Even if your interest rate goes up a little bit on that auto loan by extending out the term, if it cuts your payment in half, it's probably worth it to you, right? Now you get the house that you want. You got a lower payment on your car loan. You might want to pay it off quicker, pay more to it. We're just going to use whatever that new payment is to qualify you. So that's a good scenario, and it makes a lot of sense. So yes, you can do it. It shouldn't mess you up. Unless your credit is super low and it pulls you below, then be careful. But if you got decent credit, shoot your shot. Get the best scenario you can.
I wish I would have bought my car after I bought my house.
Yep, me too. Me too.
But
It is good though. It's all good though. So somebody had asked me just like a super basic question, like, what do I need to qualify, and what are qualifying factors? And I know I talked about this in the beginning, so if you missed this, I'll just go through it really quick. Like the most important factors to qualifying are credit, income, and then really like the assets that you have. Those three things are really going to determine what it looks like. The amount of debt that you carry is part of your credit. So if we can do some stuff to adjust your debts, consolidate, extend terms, eliminate debts, pay things off, that certainly would help you. Collections are very hard to deal with sometimes, because sometimes those collection scenarios have to be paid off. Sometimes we get around it, sometimes we cannot. But if you have stuff in collections, one, it's hurting your score already. Two, it might be really hurting your ability to qualify if you have something significant in there. So just kind of pay attention to those things. That would be something I would definitely look at. But those are the big things: income, your credit, your assets. That's what somebody's going to look at to qualify you. And then you got to figure out what kind of house you want, what kind of loan you want, what you're willing to put down, and all those different facets. So
I got another question from Jameer.
what does he want? What does he want?
He said, what are the top 3 products you recommend if you own a house already to help improve your financial situation? So,
If you own a house already,
yeah, so he said, example, HELOC, savings, refinance option. What would you recommend as like top 3 products?
I think HELOC would be
HELOC for sure.
Yeah,
HELOC for sure.
HELOC is top tier for sure. Cash out refinance can make sense depending on your situation. And the thing I think people are starting to learn in this environment is everybody for the last 2 years has just been refinancing for rate alone, right? Like, oh, I just need a better rate. But I think now people have to be a little more purpose driven, because if I say, yep, I'm going to increase your rate by 0.25%, but I cut your monthly payment down by $370 a month, what matters more to you? Having that extra $370 a month to like pay for daycare or take on a car payment or do something different, or that 0.25% less of a rate because you just want to keep this super low rate. I understand both sides of it, but I would just say that's an individual like decision that you need to figure out, right? Is it worth it to get the money out doing a cash out refinance? Maybe. It probably is, to be honest with you, but I think that's a scenario that person has to kind of come to grips with and know what makes sense for them. But HELOC for sure, that's a no-brainer. And then if you also own a house, I mean, third one, I'm trying to think what else would be like super compelling to get a hold of. I don't know. Just make sure you have decent credit cards with good limits so you can pay for stuff and go 0%. That's 0% is better than any percent. So I would look at that scenario for sure.
I would, yeah, I for sure the HELOC, right? The reason why I say HELOC is because it's a great line of credit to have for any situation scenario. Whether you're looking to update your home, purchase another home, right? A vacation home, a rental property, whatever that looks like. A HELOC is the best way to build that credit and to have cash on hand to where you can be able to purchase things, right?
Sure.
Credit card is another one, right? Credit cards are looked at in the negative light, right? When it comes to anything, because if people say it built my debt, I got in credit card debt. If I don't have the money, don't spend it. Yeah. Whatever the scenario is, right? But I mean, you got to think like you can't buy anything nowadays without having credit, right? Like you can't. I mean, you probably like some things, but not. If you're trying to get
if you Drake, you can buy whatever you want.
But like for everyday people like ourselves, like we're gonna need credit in order to do anything. So utilizing that credit to where it works for you, not against you, is key. So, and I will extremely like if you don't know anything about credit, that's something we can get into. We can talk about that some other time. But having that credit card is key to building things. And like he was saying, like earlier, if you have anything on your credit report that is in that's in default or whatever the scenario is, get that stuff paid off, or at least get a payment plan or something to get that off of there, because it's gonna hurt you now. It's not gonna hurt you in the long run. So
yeah. But I don't. This is normally like a car rant for me, but literally, there's no reason to use a debit card for anything. Like, it's your own money. If something happens to your debit card, you're liable for it. The bank takes 2 weeks to figure out how to get the money back to you. It's a process. If something happens on your credit card, you dispute it. If it's stolen, you tell them it was stolen. In a week, you have your card back, and there's no money or liability on you for that. So, yeah, I don't think I've used a debit card outside of pulling money out of the casino occasionally. For anything outside of that, there's no purpose for it. Especially if you travel, if you're a big traveler, you should never use a debit card. Always use your credit card. And the other thing I think people got to understand is like leveraging time. If you have a credit card and I can buy something today and then I get 30 days to sit on my money and then I can pay them for it later. If you're going to pay for it, not if you're going to let them charge you interest on it. Don't do that. That's silly. But if you're going to be able to pay it off, if you have the money, you have the money, you're going to pay it off, use your credit card and pay it off at the end of the month. It just makes a lot more sense. So that's like my little credit card tangent.
Your credit card tangent?
I be going.
Yeah, sorry. Another question.
Oh, go for it.
I got you. Can you talk about building wealth by purchasing real estate or buying real estate or buying life insurance?
I will not talk about life insurance. I am not a financial advisor. I'm telling people this. I don't give stock advice. I will not give life insurance advice. I don't do any of that stuff per se anymore, so that's not in my realm. But when you're talking about like just investing in properties, I think it's just a matter of how you want to do it. People want it to be sexy and go get like the crazy investment property, but the reality of it is, if you just own a house, you're in a good position, right? It goes up in value over time. You catch a bunch of equity. You could leverage it. You could cash out. You could do whatever you want to do. Just having a house is helping you build wealth. Most people, so let's talk about the last couple of years. Most people in the last year, 2 years have seen at least $100,000 in equity in their house if they're living in like the metro area, right? If you're living in Lamar, probably not, but you never know. But everybody has seen their house go up in value. Now, how many people are able to save that much money in a 2-year time frame? There's not a ton of people that could save $100,000. I mean, literally save $100,000 in 2 years. To keep $50,000 out of all your paychecks over, the next year after year is very difficult for a lot of people. But if you own a house, there's a good chance that that's what's been happening to you, and it may be more than that. So that's a super catalyst to building wealth, especially like coming off of like Black History Month, where there was redlining and all these things that kept the Black community out of being able to actually build wealth in that fashion when everybody's been able to do it for so many years. I mean, golly, talk about having a head start. Because just owning a property is the right step in the right direction to building wealth. There's no way around that. It certainly happens. Another question that I got is a lot of people are buying brand new homes. Are they purchasing new builds, or are they building them themselves? Most of the time it's a builder. So you're talking about like, I don't know, Lennar or Shea or Toll Brothers or whatever. And those are new builds. People are building those houses with the builder. The builder builds them. The borrower has nothing to do with the build. They just buy it right when it's done being built, right? But they go under contract on that property during the build process. So they get pre-qualified with me. I say, hey, you can go buy a house for $550,000. They go under contract with the builder. The builder says, after everything, we think the property is going to be $540,000. They should be in good shape. The tough part about the new builds is just the time frame. It takes a while for that to happen. Right now it's about a year before those houses are done. And you might add a bunch of options. You might say, you know what, I really want like this quartz island to be 9 feet long. I really want these, I don't know, plantation shutters, whatever that, most of the time, not plantation shutters are not part of the package, but, like whatever that scenario is, you might bump your price up. So you just kind of keep that in mind. But certainly that's an option for a lot of people. You can also build a house yourself, like a custom build, and we do those too. That's a construction loan. And you basically find a builder that's building custom homes. So they're gonna put a scenario together. They'll give you you get an architect. You put plans together. You find out how much you can afford with that build, because that is going to be pricey. But certainly you could do that, and you buy the land that it's going to be on. You do either buy the land first or buy it as part of the construction loan. And you build a custom home, and we give you the loan for the whole process. So we pay the builder, the builder that's a custom builder. We pay them during the build process every month, a draw, until the home is completely built. And then, it's already, the nice thing about that compared to waiting on like the rates and the terms and things like that, that's locked up front. The second you close on it, the draw happens, the construction happens, but your rate and everything is fixed from the jump, and you're done. You don't have to qualify again for us. Some custom builders have their own construction loan. You do the construction loan with them, and then you do what's called permanent financing after the fact, where they come see me after the loan has been, the house is built. But there's no right or wrong way to do it. Construction just is a little bit expensive right now because of the cost of materials, labor, supply chain issues, things like that. So, yes,
Cool.
Couple scenarios.
Got another question from Izzy Baby. She says, last question. It better not be no last question. We need all the questions. Are you advising we get a HELOC even if we don't need the money right now? She has a ton of money she has a ton of equity in her home. What happens if I get a HELOC? Does the money sit in an account?
No, it doesn't sit anywhere until you borrow it. It's nice. It's just a line. It's just like having a credit card with that you never use. If you never use it, it just sits there. But, God forbid something drastic happens in your life, or you want to finish a basement, or you want to send a kid to college, and you're like, man, this is going to be more expensive than I thought. What a tool, what a vehicle to leverage to help you do all those different things. Would I advise that you get it just to have it? Yep, because you never know when you're going to need it. I just can't see it. I can't see the downside of it unless you're just irresponsible with how you manage it. But it's such a great vehicle to have. It gives you access to a lot of money that most of the time you wouldn't have access to. And the rates are typically significantly less than what you're going to see if you did a personal loan or a credit card or any of those other facets.
Dang, I had a follow-up question with that. I just left it, but dang. Oh, but with HELOCs, like most of them is like a 30-year like total, right? So 10-year repayment or 10-year where you can borrow 10-year, borrow 20-year repayment, right? So you can always refinance it, and it's better to have it and not need it than to need it and not have it.
Ooh,
right?
That's the truth.
You know what I mean? So, and like he was saying, like it's a great way to have just money like there just in case you need it, for whatever that comes up, emergencies or whatnot. It's a great way to just have that ready, right? This is what I was gonna ask. How does that affect like loan to value and like DTI, like having just that sitting around? Does it help it, hurt it, or is it just?
I mean, it increases your loan to value because it's like a second mortgage behind your first mortgage. So it'll obviously your loan to value, the amount of like liens you'll have on your house will be higher, but if it just sits there, it doesn't do anything. If you never borrow against it, it doesn't do anything. But it certainly gives you the ability to access funds if you needed it, to consolidate debt, pay things off, whatever. It's really a great tool. Just use whatever you want. I'm a fan of it for sure, but it typically lasts 10 years. So you have a 10-year term. Then after the 10 years, if you don't refinance it, whether you have a balance of, 5,000 or 50,000, then you have 20 years to repay that balance. So
right.
Yeah, not a bad scenario.
But
at
even
all.
Then you can still refinance it
anytime.
So it doesn't hurt. Like having a HELOC, I see nothing but positive having a HELOC.
If you never use it, great. But what if you did need it? How quickly could you turn a loan if you needed money, whatever that case may be? If you just have the HELOC sitting there, you don't need to go find a loan. You have it. Borrow, pay it back, do whatever you want to do. Great scenario for people to have.
Oh, yeah. Cool. What other questions you got on the docket?
I don't know, man. We almost at 7:30, so we about to wrap it up.
We'll wrap it up.
We getting close, my guy.
I think there was one question I wanted to at least touch base on.
Somebody asked, is it better to update my home or move to the next? I mean, I guess that really is a situation of, do you want to stay in the house that you have and make it the house that you want it to be? Or do you want to try and go find that somewhere else? If you ever seen Love It or List It, that's exactly what they do every time. So you got to figure out like, hey, if I do these renovations, will this be the house that me and my family are happy with? If the answer is yes, then yeah, do a home equity line, fix up your house and make it the way you want it. If it's not, then you got to start looking. If that's not going to work for you, then start looking. Some things you can't buy. You can't buy more square footage, right? You can't buy a bigger house. You can't buy a yard. You can't buy, back in the open space or a walkout. Some of those things you can't buy, right? Can't buy a 4 or 3 car garage. Those things you have to go get. So if you don't have that now, it would probably be very expensive to try to add any of those things to your house. So just think about that scenario, I guess is probably a good way to put that.
I think that question specifically, it kind of just, like you said, it's based on you, right? If you're okay with the space you have, right, and you're just looking to remodel your home, then why not just remodel it? If you like the area, you like the school that your kids are going to, you like the district, you like how everything is inside the home as well as outside the home, then yeah, just remodel it, right? There's nothing wrong with remodeling your home. But like you were saying, like if there's things like it's gonna cost like a significant amount, or you don't like the area, you feel like you want to be in a better area,
Yeah, that's a good one.
better school district, whatever that scenario looks like, then that's when you'll probably look into like purchasing that next home, right? And it's okay, like you can still look for homes in that area if you wanted to. Like you don't have to leave the neighborhood completely if you don't want to. But I think that question specifically, it really just depends on what that looks like for you and your family, and how you want to move to the next thing.
Yep. Love it. Love it. Love it. Love it.
Shout out to my boy Julio. What's good, man? How you doing, G? I think we're looking to wrap it up, man. I think we're looking to wrap it up. Unless we have any other questions.
I'm gonna let y'all shoot your shot. If you got a question, now's the time to ask.
Got a little time. But I do appreciate everybody in chat. Appreciate everybody dropping those questions. If you are on the YouTube, if you're not on the YouTube for some reason, I don't know, like you can click on that link that Stokes pinned. Jump over to the YouTube channel. Click on the link at the top. If you have more questions, you can click on that. Add your questions. If you're looking to buy a home, that's a good way to get in contact with Stokes. If you're just looking to get set up right, that's a good way to get in contact with Stokes. And we will love your feedback in there as well. So if you have any feedback, go ahead and click on that link. Get in contact, man. But we do appreciate you guys. Sorry I'm not able to see my beautiful face on camera. My other camera just died in the middle of it.
Shout out DP. Shout out Young Ben back
Young
there.
Ben in the back.
Young Ben in the back.
Young Ben, Young Mod. It's a cool night. How you feeling? We doing good, man. We doing good. Just going over some information, man. We wanted to. The purpose for this, right, is like I said earlier. If you wasn't already in the chat, my man Stokes, he's been doing this for quite some time now, and not to toot his horn, because I don't like making his head big.
Don't.
I don't like making his head big. But
I'm gonna bring it down.
He's been a top LO in Colorado, or not just Colorado, and the company for quite some time. And he knows what he's talking about. And if he doesn't have an answer to your question, he will find the answer. If he can't do anything for you, he will find the perfect person for you. He's not going to be selfish in a way to where, oh, I'm going to get this loan regardless. It's how can I make it to where this is a memorable moment for you and that you are going to benefit from it, right? He's looking out for your best interest is where I was getting at, right? He has a great amount of contacts. As you heard earlier, he wasn't able to answer any commercial questions, but he has people to do that, right? If he doesn't have the best products for you, he's going to get you over to somebody who's going to do it for you, right? And that's what we're looking to do, man. Like I said earlier, we don't have the financial literature like we do in like public schools, or I don't know if they do it in private schools or not, but this is stuff that we need to not only know ourselves, but to teach the next generation. I'm gonna teach that to my niece. I'm gonna teach that to my nephew. When I have kids, I'm gonna teach it to my kids, right? But I want to give it to the community that I'm connected to already, like the people that I'm growing up with, right? I grew up with. Sorry, the people that are. I have I have my coworkers. I have my friends and family, right? I want to be able to get that information out to them so we can grow together, right? Because um, there's there's a lot of different like sayings out there, but it's really just that generational wealth is true, right? If you stuck in a cycle, you're not going to get out that cycle until you get the knowledge, and the knowledge is out there. It's hard to find it. Sometimes for this, it's something that we wanted to just get out to you guys and make it free, right? A lot of this stuff people will probably charge for, right? But that's not what it is about for us, right? We're trying to make sure that we are helping you guys in multiple different ways. But
Yeah, sincerely and genuinely, if you ever just watch my rants in the car, I'll give you the game for free. But like that's all this was. We wasn't trying to make people like sign up or subscribe or do nothing like that. Like legitimately give y'all an opportunity to ask questions, get some legitimate answers, and then hopefully you guys have some strong feedback for us. And if there's anything I can answer for you guys, obviously you can reach out to me. That's not a problem at all.
cool. So we, like I said, we do have the link on the YouTube. What I'll do is I'll help Stokes old ass with the
Yeah.
on his page. We'll probably try to get the link on his page on his about me, and then you can just click on there and you can get in contact with him, or you can just DM him. That's a good way, or DM me if you want to, and we'll get y'all taken care of, man. So we got a lot of shout outs. Appreciate y'all. Appreciate y'all's time. I appreciate you guys. I really do. If y'all like to see more stuff like this, just let me know. If you're in the Discord, I have a prison Discord that you could be in. That's what the name of it is. But you can always reach out to me there. Like I said, you can DM me. We can try to put some other things together for you guys. And get more people. Hopefully, we'll see how this goes. We'll see how this goes, man. So
we might pull it off again. You never know.
We'll see. We'll see. I am trying to put together a podcast with my Discord partners. I'll get some more information out on that soon. Just talking about a couple of different things. So, but we do appreciate everybody in here. If you haven't already, make sure you like this stream. It will be greatly appreciated. It helps out the YouTube channel. Reach out to your boy Stokes for more information. You have him on IG. If you don't have him on IG, it's gonna be suntan_Superman_. I don't know why he chose that, but
look at me. Look at me. This guy.
Go ahead and follow him on IG. He does do some some IG stories. He kind of goes on rants, which is pretty cool, and gives information. I'll give that information out to you guys. But once again, we appreciate you guys for coming in, and we'll talk to y'all later.
Appreciate y'all.
Peace.
Have a good night.